What is good, Lottery Stocks fam? I hope you are all enjoying your weekend. Today I want to talk about some stuff happening with AMC. Also coming into the week with GameStop, we have earnings happening. I want to show you some signs we're getting for the overall market, especially crypto, and we need to talk about Bitcoin towards the end of the video. As always, since I research, edit, upload, record these for you guys, not in that order, I'm going to ask you to please hit the like button. It is free, it helps me out, and I feel like I've had a disconnect with some of you guys. Make sure to hit that subscribe button and have post notifications on, and if you feel the need that you need to talk to me more, make sure to join the Discord under the video. Okay, so AMC Cinemas senior lenders meet to discuss chain's debt options. Senior lenders to AMC Entertainment Holdings, the money-losing theater chain, according to Yahoo Finance, met by phone Friday to discuss ways to bolster the company's balance sheet. Yes, AMC is currently losing money. However, we have checked the past 4 previous earnings for the quarters, and they are extraordinarily well, especially to the previous years. So yes, we are still rebounding back from COVID. Anyway, what is this? What is this talking about? Well, AMC has $860 million cash on hand, and the 2026 10% to 12% PIK loan is no issue. The next large debt note is due in 2029. So why are they meeting 5 years early, and who is worried? So one thing to note, in this article, you can see that the lenders met on a private meeting, a private virtual meeting. So it was over phone or over computer. Either way, it was over a screen and it was private, but it wasn't just AMC at this meeting. Let's take a look. The lenders have met before, but their discussions have gained urgency given the weak state of movies expected from Hollywood this year. AMC has about $4.6 billion in long-term debt. The lenders are represented by the law firm of Gibson and Dunn Crutcher, which didn't respond to a request for comment. You can see down here, in the full year of calendar 2023, AMC raised $865 million of cash. So the story tells us Gibson, Dunn, and the Crutcher is the law firm representing the lenders who held the Zoom meeting. The story avoids mentioning AMC's $860 million cash on hand at the 2026 second lien 10 to 12% PIK loan, $980 million, which will be easily handled. AMC has not missed any interest or principal payment. AMC's next major debt note is due in 2029, so they're meeting 5 years early. It seems the meeting is about another issue, not AMC handling its long-term debt, which I completely agree with based on the term. Now, who are the senior lenders meeting to discuss of AMC? Goldman Sachs. Now, one thing to note, I like this comment by Biotech Moose, is that remember this was a Zoom virtual meeting of the senior note holders to discuss putting together a supposed AMC debt restructuring proposal. AMC was not even at this meeting. Short selling note debt holders possibly holding against AMC. All sounds very sus. You guys let me know your thoughts in the comments down below. Essentially, there's no reason for meeting. There's no reason for this. There's no AMC this, AMC that. This has to do with their long-term debt, and the situation they're in is already structured to where AMC would be safe, especially with how their earnings have been reported. Now, the article does quote one thing, and it's that the reason for this is because, yes, AMC is in a strong point, but the movies coming out in 2024 are showing signs that AMC is going to report terrible earnings because of the movies coming out, which could be a valid point, could be a valid issue, but it's not going to cause a major issue, seeing that it's 5 years out, that AMC has to get things taken care of. Okay, next I want to talk about GameStop earnings real quick and AMC numbers and what's happening with the short volume. First of all, GameStop, take a look at the previous earnings. 1, 2, 3, 4 quarters, all mostly green. Here's the thing. There's a shot that their net income, diluted EPS, net profit margin, operating income, and a net change in cash is all going to be positive like the previous earnings, and there is a slight chance that the revenue is going to be missed. And this is where they're going to attempt to spread FUD and bring GameStop down. We already saw articles yesterday that we talked about where they're spreading FUD that GameStop already missed, which GameStop earnings didn't even come out yet. I believe it's coming out Tuesday, okay? 26th of March. So this is just one thing to note. Cost of revenue and revenue may be down a little bit, but everything else should be decent for GameStop. And also those just may not even be down. Overall, it should be a decently solid earnings across the board. Now, something I wanted to show you is that on March 22nd, Friday, total short volume reported was 82.37%. This is bad because off exchange is almost 78%. And then long volume was only 17.63. So almost all of the float traded in GameStop was short volume, and almost all was routed to ATSs, dark pools, etc. Meaning very little volume was traded, and of that very little volume was long volume. So you can see why GameStop isn't holding up too well. But on top of this, what they had to do is add on to short exempts, coming up from 4,000 to 19,000, almost 20,000 short exempts on Friday, March 22nd. Next up, options chain for this week. We are bullish as of right now, 40,000 calls compared to about 15,000 puts. Now, you already know what market makers are going to try and do. It's GameStop, it's earnings. It could be bad news, bad case scenario. If GameStop and AMC play out that second scenario, the bear case scenario that we talked about yesterday, if you didn't see yesterday's video, go watch that. Then chances are Bitcoin, the overall market, is going to play out a retrace that we're going to talk about in a little bit. AMC short volume reported was 70.53%. Off exchange was about 66. Total long volume was around 29%. Okay, so still very bad for any given ticker, but much better than GameStop. And we are sitting at a high of 14.25% short interest as of right now, coming into the week for AMC. So this is just to prep you for what is about to happen. Short interest on the rise. As it continues to rise, chances are it's going to flush back down to around 9-10%. And you're going to see a move higher in the charts as we play through another cycle. Coming into the week, we are bullish on the options chain with 45,000 calls compared to about 25,000 puts. Short exempt volume died down a little bit on Friday, coming down to 59,000. Okay, couple other things before we start the week. AMC also had an order imbalance of 88,568 shares on the buy side of last week, and I want to jump into what just happened with the market. The U.S. House just passed a $1.2 trillion spending bill in just another day at the office. At the current pace, the U.S. deficit for this fiscal year will cross $3 trillion, nearly double the 1.6 deficit that Congress estimated. Deficit spending is on track to hit nearly 28% of GDP by 2050. Meanwhile, the federal revenue will be just 19% as U.S. debt levels are skyrocketing. Over the past 100 days, total U.S. debt is a whopping $1 trillion, an average of $10 billion per day. We will likely see U.S. debt hit $36 trillion this year as the spending spree continues. Overall, economy not looking well behind the scenes, and if you take a look at the overlay of the CPI inflation from 1970s correlated to the CPI inflation of now, is the Fed on track to commit a major policy error by cutting rates too soon? You can see we are here in the blue line, and back in 1970s you can see we dropped down to here. They ended up cutting rates too soon and it came all the way up and made it much worse, meaning we could see a terrible year for the markets over the next few years. Worse than 2022, worse than that 1 year sell-off, right? Speaking of the SPY, speaking of the market, 521.21 closing Friday, still watching that 535 level on the SPY. This is the weekly time frame. Just to show you what is happening, you could be seeing this last move higher before a sell-off even further, like you saw before the COVID crash, right? This gap higher, double peaked, and then crashed even further. And the SPY likes to do this, right? Fly higher, slightly correct, moon, and then crash even further for the rest of 2022. And now the SPY has been moving, has been ripping. As of right now, I just want to warn you because the SPY isn't showing any sort of weakness, but this amount of steam is going to run out at some point. Moving on, Obama warned Biden in private that his re-election campaign was shaky and Trump could win. Take that with a grain of salt. Just watch DWOC coming into the year, coming into election year, which I believe is happening in November. Overall, DWOC on the weekly time frame came down and tested the 236. It's looking ugly on the daily, but bouncing off of that zone, I'd watch for a potential buy opportunity at $32 for DWOC. Not financial advice, I'm not a financial advisor. Now our Tesla trade. I want to warn you guys about something real quick because we are in Tesla puts. If you're in the Discord, 170.83 down 1% Friday. Tesla is at a major support level, a structural support level where this is either going to bounce and come up to 315 or more, or this is going to crack down, come down to 147 or below the $100 range, down to around 80 bucks. And as of right now, we're betting the downside just on the state of how Tesla has been acting, has been reacting. Okay, so I just want to put this on your radar. Be very aware of this. And as of right now, we are on the bear side of things, and you are going to see people on the bull side of things. Let me know if you're a Tesla bull or bear temporarily in the comments down below. Of course, long term, I am in Tesla shares still and will continue to add on. Now, crypto. Coinbase to launch Bitcoin fund according to filings with the SEC. BlackRock just changed their mind on Bitcoin and decided to launch an ETF because, in quotes, their clients were consistent and enduring in expressing their interest in Bitcoin. Bitcoin through bull and bear markets. In other words, they found out that they can make a quick buck off of scamming people. And finally, the 2016 cycle may be more similar to the 2024 Bitcoin cycle than we think. First of all, the pre-halving re-accumulation range breakout. Just like in 2016, Bitcoin broke out from a re-accumulation range to enter its pre-halving rally phase in light blue in 2024, which you can see right here and here. Number two, the pre-halving retrace began. Bitcoin began its pre-halving retrace approximately 28 days before the halving in both 2016 as well as 2024. And number three, similar initial reaction after the beginning of the pre-halving retrace. In the week following the beginning of the pre-halving retrace in 2016, the weekly candle produced a strong reaction as evidenced by a downside wick, but this reaction was short-lived and preceded additional downside. Currently, Bitcoin produced an initially strong reaction via a downside wick, but is showing signs that a reaction may have been short-lived. Bitcoin will need to continue to maintain these current highs to avoid a 2016-like fate where initial reaction was strong but short-lived. So what are we talking about here? If we take a look at the Bitcoin chart correlated to the 2016 halving cycle, you can see that Bitcoin may enter a danger zone, a temporarily worse danger zone before mooning higher. And if we take a look at the chart on the weekly time frame, this is what they're talking about. We saw a flush down to shake paper hands out, and we came back up on the weekly time frame. However, this wick was short-lived, and what they're basically saying is if this is anything like the 2016 or the 2020 halving cycle, this is going to come back down with a stronger move and break below that wick, which would be under 61,000. If that is the case, if that's something we're watching, I will tell you the levels that we're watching right now. First of all, if we break under 60,000, you're watching 54 and then 50 to 52K. I think that's the potential bottom for Bitcoin, and I'm not going to give you any levels under that. However, if we end up closing next week at any point above 64,000, closing the week and don't wick under that, then I think Bitcoin cycle is going to be a little bit different and we're not going to have that retrace. Last but not least, meme coins. Doge is doing extraordinarily well. Pumped back here in 2021, pumped again and consolidated this entire time, and now it is starting to climb again. This is exactly what AMC should look like. It's actually exactly what GameStop, Ethereum Classic, XRP, and other meme plays should look like. But as we all know, some are well manipulated, especially the ones on the market. Overall, guys, I hope you are enjoying the rest of your weekend, and I hope you found value out of the video or just enjoyed watching it. Make sure to watch my video yesterday on AMC and GameStop because we did cover the charts and some important things that are happening. Also, get in the Discord. The link is right under the video. I'm in there on the daily. Come talk with me. Come request videos, and let's make some money together. We also have options trading alerts in there, so there's no reason not to do so. And if you guys want a cool platform that gives you access to level 2 order book data for free so you can see where whales are loading up and dropping off shares, and ultimately a ton of features that other brokers don't give you, this is a free platform called Moomoo. Open an account and deposit even a penny before the month of March is over, and they're going to give you all of these sick benefits that you see on the left hand side of the screen, alongside some that they don't list. Use my link, and if you've already done it, tell your family members to come do it. That is it, guys. I love you all. Lottery Stocks out.